Australian shares are firmer, adding to Monday's relief rally. Hopes that China will take more steps to boost growth and Greece will be able to avert a euro meltdown are helping to boost sentiment. And to talk more with us on stocks is Justin Harper of IG Markets. Morning, Justin.
Morning.
The sell-off in recent weeks has wiped out nearly all of the year's gains for the Dow. The question we're asking this morning is Wall Street flirting with the bear market, do you think?
Yeah, good morning. I think it's very much looking down the barrels of a bear market at the moment. We did see, a bull market for the first 3 months of this year, and people thought, could it be sustained? That obviously hasn't happened. It's just what's caught people by surprise is how quickly this turnaround's come around. We've seen some sharp falls in the markets here in Asia as well as across the globe, and so all of those gains that we saw in the first quarter of the year have almost been wiped out, and so people are very sort of uncertain about what the future holds with the eurozone, the US recovery in China. So some very sort of dark days on the horizon, and bear market would be the most obvious thing to happen now.
Well, markets have turned positive today, but will any powerful rally be short-lived?
Yeah, I think last night we saw, a minor blip. It was pretty much off the back of the Chinese Premier's comments about growth and the G8's comments about stimulating growth as well. So I think, that's been pretty good for the market. But, will it be sustained for the rest of the week and for the rest of the month? It's unlikely. We will see some spikes in activity as people get into the market. But I think generally for the time being, it's one of caution at the moment. And I can see it's a lot of sideways and a lot of retreat in the markets just because there's so much uncertainty around, especially with the Greek elections.
Let me ask you about Facebook. The company's shares ended down 11% overnight and it's just a touch over $34. How much would you pay for Facebook?
I've always thought Facebook was, wildly overhyped and built up off the back of, the fact it's got 1 billion users, which that doesn't necessarily mean it's going to make a lot of money going forward, and that's been seen in the marketplace. A lot of traders are using expletives when they talk about Facebook now, whereas last week they were getting wildly excited about it. It came on at $38 and then it was hard to sustain that. It's now down to $34, and a lot of people, especially retail investors who got excited by Facebook, will have their fingers burnt because they were expecting it to go up, up and up. So I think it's massively overvalued at the moment, and I would wait and see see what the price does, see if it stabilizes, and then think about if you really want to buy Facebook, see what it's like in a month or so's time.
Okay, well, now with Greece in political gridlock, will a European policy solution be almost impossible to implement? I think
it's a very tricky situation with Greece. 2 weeks ago, it was a case of Greeks had made up their mind. They wanted to leave the Eurozone, and that was the end of the story. Whereas now, there's talk of a new coalition government that actually may be more inclined to stay within the Eurozone. So, there's a lot of uncertainty in the marketplace, and traders don't like that uncertainty. So, we've also got the delay. We have to wait, and now next month until we've got the second Greek elections, we'll see what the government want to do. And even if they do decide to leave, it won't happen straight away. So there's a lot of delay, and it's of course, the effect that it has on global markets. And people don't like the fact that the Greeks may leave the Eurozone, leave all these debts owing to big banks and governments there, and just walk away. So, it's causing a lot of jitters, amongst global traders.
I mean, you talk about this uncertainty, but Greece's exit has been a long time coming. So do you think it's really going to cause shock waves of the magnitude created by the collapse of Lehman Brothers?
Yeah, I think it will. Greece, like Lehman Brothers, is one company and it's one economy, but it's the effect it has on the rest of the economy and the rest of the banking sector. So when Lehman's went bust, it was really about what other companies would go bust as well. And if Greece goes away from the exits from the Eurozone, it will be what other countries want to leave the Eurozone as well. You've got Spain, you've got Italy, you've got Portugal, many weak economies that might say, well, Greece has done it, we'll walk away from our debts and leave the Eurozone. The Eurozone collapses, and it's a huge trading partner. It's the biggest trading partner for Asia and for the US. So it's the knock-on effect, really, of a Greek exit that people are really worried about.
Okay, let me ask you, the Merkel dogma, yes to growth but no to debt. Does it make sense for the economy or for society?
That's a tough one to stack up, really, because if you want growth, you're going to need debt. Companies they need to borrow to be able to grow, to invest money. So I think the two go hand in hand. What we've seen with Merkel and the Eurozone so far is this obsession with cutting back on spending and austerity measures at the sacrifice of growth. And they have to be more balanced. They have to have cutbacks, but they still have to concentrate on growth. So you've got to get that balance right. And the French Premier has brought that back onto the table. The G8 now talk about growth. So they've seemed to have changed their focus and sort of woken up to the fact that austerity measures aren't the way forward.
Okay, thanks very much indeed for that, Justin. Good talking to you this morning. That was Justin Harper of IG Markets, and that's a business wrap from me. Back over to Stephen Yvonne.
All right, thanks, Patrick, for that.